To finance now, and America's trade deficit has widened to a 10-year high, despite President Trump's promise to reduce it. Australia's trade figure has also widened, except it's a surplus. Here's Alan Kohler.
So that went well. President Donald Trump promised to slash America's trade deficit with tariffs, but it's blown out instead to $621 billion for the year, up 12.5% on 2017, and $60 billion for the month of December, which is a 10-year high. Most awkwardly, the deficit with China was a record high of $419 billion. Now, the problem has been the strong US dollar increasing US consumers' buying power, and also the retaliatory tariffs have been quite well targeted. Quite a different story down under. Data out today showed that our January trade balance jumped from $3.7 to $4.5 billion, a surplus, about double what the market had expected, with record high exports to China. Now, just on those retail sales numbers, here's a chart of them against house prices, and although it's not a perfect match, it's close, and it suggests that retail sales may have further to fall. And the reason for that relationship is shown in this graph from yesterday's speech by RBA Governor Philip Lowe. On top is consumption and income, and as you can see, consumption has been running above income for a few years. Now, the difference is made up by savings, or more precisely, a decline in the saving rate, which has resulted from the rise in wealth from house prices. But now prices are falling, so the saving rate is a fair chance to rise, which means that consumption line on that graph will have to go below the income line. The share market closed 1/3% higher today, led by Telstra, Coles and NAB, while Rio Tinto dispatched more than $2 billion in dividends. The Australian dollar was roughly steady in the mid-70s, and the wheat was the biggest mover on commodity markets, falling 2.6%. And that's finance.